Good morning, everybody. It is Friday. Friday is chilly chill. Just had some data come out on the market, pushing prices around already. Looks like dollar strong data so far, meaning that the economic data that was just announced is causing the dollar to get stronger. So let's go straight into the charts. If you want to find out about us, zap the QR code in the top right hand corner, go to algofactory.tech. Okay, we'll talk more about what we do later. Let's get straight into the content. Okay. Screen should be shared. Let me zoom this in just a hair, and then I shall do a couple of zooms. I should have had this prepped before we went live, but that's okay. Y'all don't mind. All right, cool. So, almost predictable that this move down on gold. We're watching gold right now. This started before the announcement. So, gold did predict in a sense which way this was going to go, but I haven't back tested this enough to know if I can go ahead and use that data to try to make any money, right? So I might have to take a look at gold. I just happened to be watching gold, testing this indicator here, right? The one I've been kind of talking about a lot this last week or two. And now I'm looking at using these exits to create a new indicator as well. In fact, I'm in the middle of it. So we already have the next one on the assembly line, which is great. Let me see here. Give me one more moment. I had to send a note. All right, cool. So let's take a look at the euro. And we can see the euro really took a hard hit right now. We're looking on the 30-minute chart. So the EUR/USD, look, this is just a reminder on how this works. We had a lot of data come out this morning. So if you look on the calendar, you've got right here at 8:30 EST, average hourly earnings, non-farm employment change, unemployment rate, revised University of Michigan consumer sentiment, right? So that being the case, we're looking at the dollar getting stronger. So all of these numbers, as I refresh, will probably turn green, or at least most of them. Yeah, so you got 3 green numbers. It looks like okay, so this last one hasn't come out yet. So look, unemployment rate is lower than expected by not much. Non-farm employment change is pretty big. Now, one of the things that we're looking at, there's 2 issues with these numbers that we're looking at right now. One is revisions. Okay. So with the revisions, um, so there was a comment on yesterday's or 2 days ago's FOMC when Powell was talking. Okay, he was like, somebody asked him a question about the revisions last year for the January FOMC, and his comment was, well, yeah, the February revision was a surprise. And so what he means by that is that we've been noticing with a fair amount of this economic data that a revision comes out the following week, right? And that revision is drastically different to what the original number was. It wasn't just a slight revision. And when these revisions come out, the market really goes for a spin. And so we can almost expect a revision for yesterday's data, maybe to come out next week, the week after. But right now, this non-farm employment change, also there are issues with it, even though we have a massive increase. Is that going to be an increase in full-time jobs with benefits? Is this like part-time jobs, people taking 10 hours a week at McDonald's, 10 hours a week at Carl's Jr.? Like, we don't know. We got the gorilla in the house. How are you, sir?
Hello, how are you?
Doing awesome. We're just talking about the data that just came out, pushing markets around. So, average hourly earnings up 0.6%, expected 0.3%. We're just talking about how the market is reacting to data right now with dollar strong, crushing the price down of other items because the dollar is strong, right? But we're also talking about how this data is, how do I say it? Well, for one thing, the data itself can be skewed even if the reporting is proper, right? So just because you add, 100,000 more jobs than you expected, what kind of jobs are they? Are these full-time jobs with benefits? Are these just, taking part-time jobs, sweeping floors somewhere, which is all very respectable and I respect those jobs. But is it really making a difference economically, right?
Nope.
Is the country getting that much better just because this many jobs were added? Right? Are there any full-time jobs with benefits in the mix? And if so, what is that percentage? We're not given that data. But that said, the data coming out green and strong is going to push the dollar up regardless. And then if that data, I don't know, if the real heads know what that data is, this might change. And then we have revisions where, last year we had a revision to, I think it was I don't even know what the data was, but there was a revision, and that revision actually supposedly surprised Powell. He talked about it yesterday, right? So we have data come out, and then like a week or two or three, whatever it is later, that data comes out with quote unquote revisions. Like, oh, we got it wrong, and this revision is like skewed way to the other side of the spectrum. So you know, so this is just the kind of thing that we're dealing with. But remember that these announcements are used to push the market where these people want to push it, right? I mean, that's in the end what that's going to be. Now, I don't know that. I don't talk to these people. I'm not saying I'm in these conversations, but I can almost guarantee you, you have a few people with a lot of power who can use it to make billions of dollars by just putting out one piece of news. I mean, that kind of thing is if they can take advantage of that, they will. I mean, if you can make billions of dollars for your group just by putting out some news that they think is relatively harmless, and the only harm that's done is like a bunch of retail traders that lose money, then they'll do it. They will do it, and I would say they would do it about 10 times out of 10. The amount of this kind of thing is that goes on is remarkable. So this would not surprise me at all for that to be true. So everything's going down against the dollar. Gold, I was looking at as it happened, and we'll go back to gold. That took a little tumble, but it was on the way up. It has not deviated from this kind of move up that's been going on since about Christmas. So it just moved down. I would expect gold, whether it happens, higher or lower, whether it happens here or even down here, I would expect gold to U-turn and head back up. But I would need to actually, before I say that for sure, is take a look at the algo on this messy, messy screen here. So give me just a moment to clean that up. Bitcoin is resuming its move down, probably as a result of that. We'll get back to Bitcoin in a minute. So there's gold, and there's gold on the daily, and it's still, there's a range lock that's been going on since early January, right? So almost a month. This range lock is going, and it hasn't. It's not outside of that. Gold was at the top of this range lock as this data came out, and is being pushed down pretty heavily. So I would not be surprised to see gold head down to this low 2000s, this 2015 area ish, and then just catch its feet and head back up again. And I think gold will be range locked. And this is kind of a silly thing to say, but it'll be range locked until it's not, right? And which way that goes, I mean, gold is just strong right now. So let me send a quick note. Okay, so let's go ahead and take a look at Bitcoin's reaction. This is a lot of news. This is three kinds of news that came out at the same time. So when you see that, you will see a strong reaction. Whether or not that reaction is warranted, the reaction will happen because people can make a lot of news on that, or a lot of money on that reaction. And we've been watching the 30-minute chart. So, Bitcoin is no different in this sense. We have Bitcoin. Let me do this here. We have Bitcoin resuming the move down that I had talked about. It actually bounced up pretty hard. So I expected a move down that was going to be definitely not a straight line, but I didn't expect necessarily to see such a strong, bounces up. But clearly, It's been having stronger bounces up, but still following the pattern that I talked about. Let me reassess and make sure I still think it is going to head down. And okay, so uh yeah, it can still head down, but I think it's going to remain range locked. I do think that there's a decent chance it'll either head down and be range locked, like in this larger range that you see drawn right there. It'll either eventually make its way down to the bottom of this, or it may develop a new range. But for now, I can't really forecast beyond that on the near term. So perhaps a range like this, or even like this. We might see that for a minute because all the forces are opposing, right? So you have high time frame, bearish energy with high time frame bullish energy. It's a mixed market, right? So I think with the halving coming and so many things happening in crypto in the world, it just seems like money is going to hang out and more or less be on the sidelines. And the question is are we seeing an accumulation or are we seeing a distribution, right? And the only way you really know is after price moves out of this consolidation. So if this price moves down out of this consolidation, right, then you're looking at this having been a distribution, probably to retail. It might have been that we've seen the distribution and now this is a reaccumulation too, right? So if price wags back and forth inside of this range bound between, say, 40,500 and 44,000, then you're looking at a move up like this. Um, that and this having been a reaccumulation, like a sideways, on the way up accumulation, and that of course happens. We've seen it a lot of times in the last 12 months, right? Any of these places where prices stopped on the way up has been an accumulation. Some of these, like a vertical one, like it's actually going up and accumulating, which is a sign of extreme bullishness. Either way, either one of these scenarios would not surprise me. But remember, this is high time frame. We're looking on like the daily. So when you look on such high time frames, it's not like, you know, it's not it's not as useful. I mean, it's useful. It's useful if you're an investor and you want to look at it that way. But the thing about high time frame is that so much can happen between the time that you look at it and the time that anything happens, right? So like 5 bars later, it's a week. 10, 20 candles later, it's, you're looking at a month for 20 or 30 candles later. And what can happen in the world in that time is huge, especially right now. Things are so fluid, things are so changing. You got Israel, Russia, Taiwan. You have so many, you got the Red Sea, you got this, you got that. So being that, that being the case, we have to be careful in really relying on very high time frame looks, right? And that's, as a trader, I look level by I don't the daily for me and the weekly are all about looking at the trend. I'm not about trading the daily. I'm not about trading the weekly. I'm about trading like the 30-minute chart or even the 3-hour chart. Like if I want to put a trade on and, that trade goes for all day, maybe stays on for a day or two, like that's like the 4-hour chart, right? The daily is more for a higher time frame scenario. And with, I don't know, it's just it's not in my personality. But if you like to trade the daily and you do an algorithm and you are able to determine, then if you're determined a way to make money on that, then by all means, that's up to you. I'm just talking about the way I do it. And it's not right or wrong. It just is, right? I mean, if you're profitable, you're profitable. That's the end of it. So I do think again with Bitcoin, it's one of those scenarios where I'll be looking for trades. I don't commonly I will trade Bitcoin. It's not my most common thing to trade. I'm a forex trader. I have certain cryptos I like, Bitcoin being one of them. But if I am going to trade Bitcoin, I'll probably look for some kind of bouncing around, like I showed you earlier, like inside of this range. Where are we? Like I said, so maybe like this. We'll see how it goes. If I can get the range to, or I can, if the range establishes, right? If you really can see a very clear pattern of a range, and of course I'll trade that. I'll trade it on the lower time frame. In the meantime, I'll be just looking for that, you know, looking for that trend. So I don't know, Gorilla. What do you think? Do you want to share your thoughts on Bitcoin right now, or you want to wait to the private group?
Went to the private.
Okay. Let's look at Ethereum. And of course, we know that throughout this entire like last year, Ethereum has been underperforming Bitcoin. So, again, this also looks like it's forming a consolidation of some kind. We have 2 touches down here, and I can't say that this is the case yet, but I might be looking to see if price just develops a range kind of like right here for the short term, in the next like week or two. And maybe, looking for how I can trade those, right? In the meantime, it's still higher time frame range bound as we talked about with Bitcoin. Same scenario, right? Pop up back into the range. It's just where it's at. Solana, I know we like to look at. Okay, so a little bit of movement actually coming straight up, like not even making its way down before it goes up right now. Now, this doesn't mean that it's not going to do something like this, right? It may still decide to head down and then go up, right? That's a pretty strong rejection that we see so far on the current daily candle. So just to look at this, now this candle's got 4 hours yet to close because I don't really use the daily. I use the 18-hour. I like to avoid the machinations that go along with daily candles, right? Because everybody's looking at daily candles, and so they're going to push the price around at the close to paint the candle a certain way. You're not going to see that with an odd number like the 18-hour, right? You're going to get more pure price action. That's why I do that. So you have this price headed up, and already this rejection is strong. And this candle is, I don't know, what's 5/6? What's is that 80 some odd percent over? She got another 4 hours yet left on this candle. So we'll see how it closes. But with a strong rejection like that, there's one of two things that can mean. Now, if price, like for example, look at this candle right here, this could be a bullish pointer or it could be a high test candle. And a bullish pointer is bullish and a high test is bearish. So a little bit of candle theory, right? You have this, which is called a bullish pointer. Or it could be, it's kind of a high test candle, right? So the story that this candle tells, to zoom in real tight on this, we'll do a little bit of candle theory today. All right. So the way a candle works is that where the body is, the blue area, the top for a bullish candle, the bottom is where price entered the candle. The top of the body is where price exited. And then the two tails or shadows or whatever you want to call that, the two lines, I call them tails. Wick and tail is my terminology. It doesn't matter what you call it. That's where price has been, right? And then it also price has obviously been anywhere throughout this whole candle, but the bottom of the candle of a bullish candle is an entry and the top of a bullish candle is an exit. Now to look at a bearish candle, it's the opposite, where this candle over here, this orange type candle, the top of that is where the entry was, right? And then the bottom is the exit. And price, it's hard to see on the screen. It did go above the entry a tiny bit. There's a little tiny nubby little wick on top. But for the most part, price just entered and went down. Now it could have gone anywhere like 9-10 times, but it did exit at the bottom here. It did at one point go below, but it exited at the bottom right there. That's how that works. So if you have a candle that looks like this, or even like this when it closes, there's two things that can happen. One, it could be a high test candle where the bulls tried to push up and the bears pushed back down and it exited back out low. And so the bulls kind of shot their last, wad, if you will. They blew all their like strength trying to push the candle up, and the bears kicked back in and pushed it back down. If the next candle closes below this candle, like the low is lower and the close is lower, right? Then that's an indication that the bulls have run out of strength. Pretty decent probability. So if price continues up from there, then the story might be that the bears tried to crush the bulls. The bulls pushed back up, but by the time they exited the candle, they were not done pushing, right? So they exit the candle where it is right now, and then the next candle pushes up nice and hard, and you get a higher high and a higher close, then that's actually rather bullish, because that means the bears tried to push down, but the bulls fought back in the next candle, and then it opened up higher. I mean, it exited higher than the current one, and the high was higher than the current one. So these candles with these long wicks, they can go either way, and it depends on the following candle. For a perfect example is this candle actually right here, this doji candle with this tiny body. So this was rather bearish. This top that formed right here from a candle theory standpoint, you have two candles right here, and this is essentially a bullish engulfing. It's not quite, but this orange candle, bearish engulfing. This orange candle is bigger than the candle on the left, and the next candle certainly had a lower low and a lower close. So you have this bottom here where the exit was, and then you have the lower low, certainly lower than the prior low, and the lower close is the close itself is right at the same level, but the next candle is certainly lower, right? It closed lower, all that stuff than these others. So this move downwards is pretty bearish, right? But then you have this little doji that I circled, or I squared, really, right? I rectangled. And so it's got this, like, it tried to push down, the bulls pushed back up, and then the next candle pushed up a little bit more. That's bullish. This is like almost like a hammer, but it's actually a doji. It's a dragonfly doji, they call that. So the story that these candles tell can give you an idea of what's going to happen with price. And this look is bullish right now. Plus, you have this, each of these candle bodies is getting larger, these three in the row. I think they call that like a harambe or something. Like, I have all these candle, like, all these formations have names. And even if this ends down low, even if this closes way down here, it's the next candle that's going to tell you a lot, right? If the next candle pushes up a little bit higher, then there's a decent chance Solana is done hanging around in this area and, heads up, as long as it can break past 106. So the very, very long story short, without focusing too much on candle theory, I would say that there's a decent chance right now that Solana has retraced where it's going to retrace. Bitcoin, if it remains stable in its current range, then we might see Solana go ahead and push up and make its way up to, at least up to its all-time high. Yeah. And then we've talked about this. I like a target of about 142, 143 for Solana. If I was to take like a trade that was going to last several weeks, if I was just like maybe buying and holding, just trying to take some profit off on the way up, I would look at 140. But to be honest, I think Solana has a lot more going on than that. I think that if I were just holding Solana, I don't think I'd sell it at 140. I wouldn't sell it until the current cycle, is done. I wouldn't sell it till, I don't know, at least several months after the halving. I know generally the all-time high is going to be anytime from 8-9 months after the halving up until like a year and a half after the halving. And that's not till 2025, essentially, right? So sometime in 2025 is when I would be looking to sell Solana. Now, just remember that world events being what they are, that can greatly change the path of any financial tool. So, if you're going to really invest in something, you're going to want to talk to your licensed advisor, because we don't give investment advice here. But for my money, I think Solana is a great hold. I think Solana could be a $1,000 coin. I really do. But that's just, that's a fundamental guess. I mean, who knows? It might, anything can happen. Solana could go to zero tomorrow. It's just, you don't know it can happen in markets, but that's why you can make money in markets, because there's risk. If there's no risk, everybody would do it. Nobody make any money. So, but yeah, if you want to know more about this, we can show you. Basic candle theory is something that if people are that interested in, I can talk about it. It's really good for price action trading. And price action trading is, in my opinion, the most up-to-date type of trading you can do. I mean, I know people who trade naked charts. They don't look at indicators. They don't do nothing. A little more difficult to program that if you want to do like an auto trader. I think, they have it. They have candle theory indicators all day long. It's there now, and they're free on TradingView from what I remember. But it's not quite as easy to program that if you're trying to create an algo and walk away. But if you want to use a manual algo, yeah, candle theory is great. Just have a list of your formations, and you have a percentage of how often they work, and then you can use code that's available for free on TradingView to actually find the formations. You can use that code to go back and look for them. That's actually really cool, because that back when I started, we didn't have that, and then they did have it, but you had to like pay for it, and then now I think it's free. I think there's an indicator out there that does that. So, at any rate, Gorilla, we're at the end of the free public live lab. Can you give us that Gorilla send off, sir?
Yeah, absolutely. Guys, don't hesitate. Join us, algofactory.tech. It is the place where you not only learn how to trade, but we also teach you how to build the algorithms that trade on your behalf 24 hours a day, 7 days a week. Algofactory.tech. Trade your job, upgrade your life. Join us now.